Who controls your money? Not you, not your bank, not even your government. There is a small group of institutions that sit above all of it. They are called central banks, and they have a power that nobody else on earth is allowed to have. They can create money out of thin air. In the US, it's called the Federal Reserve. In Europe, it's the European Central Bank. In the UK, it's the Bank of England. Different names, same power. Now here's the part that shocks most people. When we say they print money, that's not really what happens. There is no giant room full of cash, no printing press running all night. Most money today doesn't even exist as paper. It's just a number on a computer screen. Someone types it in, and suddenly, it's real money. About 97% of all money in the world is digital. Only 3% is physical cash. So the next time someone says they're just printing money, you can correct them. They're not printing anything, they're typing. And that changes everything. So they can create money. But how do they control it? One word: rates. When prices are rising too fast, what we call inflation, the central bank raises rates. Now borrowing money costs more, people spend less, prices slow down. When the economy is struggling, they do the opposite. They lower rates. Borrowing gets cheap, people buy houses, businesses take loans, money starts moving again. Simple, right? But here's the problem. Governments love low rates. Low rates make the economy look good. And a good-looking economy wins elections. So politicians are always pushing central banks to keep rates low. And central banks are supposed to say, no. But what happens when rates are already at zero and the economy is still broken? That's when central banks pull out their secret weapon. It's called quantitative easing. Big name, simple idea. The central bank creates new money digitally and uses it to buy bonds. Banks hold them. The central bank buys them back. Now the banks have fresh cash sitting in their accounts. The idea is that banks take that cash and lend it to people. People spend it, the economy wakes up. After the 2008 crash, the U.S. Federal Reserve did exactly this. They created over $4 trillion, just like that. After COVID, it happened again, but bigger. Central banks around the world pumped in over $9 trillion. Here's the problem nobody talks about. All that cheap money had to go somewhere, and it went straight into houses and stocks. Rich people got richer, everyone else watched prices go up. That's not a conspiracy, that's just what happened. Now here's where it gets really wild. Central banks create the base money, but they are not the ones creating most of it. Your regular bank does that every single day. Here's how. You deposit $1,000 in your bank. The bank doesn't just sit on it. They lend most of it out to someone else. That person deposits it in their bank. That bank lends it out again. The same money keeps moving, keeps multiplying. This is called the fractional reserve system. The central bank says how much each bank must keep. The rest gets lent out, over and over. Start with $1,000. By the time it stops moving, the banking system has turned it into $10,000. Money created from nothing, backed by nothing. And here's the kicker. In 2020, the U.S. dropped its reserve requirement to zero. Banks didn't even need to keep a slice anymore. So, who's really in control? The central bank sets the rules, but the banks play the game. And sometimes the game gets out of hand. Okay, so central banks create money, they control rates, they pump trillions into the system. But why should you care? Because every single decision they make lands in your pocket. When they keep rates too low for too long, house prices explode. Young people who don't own a home yet, they get priced out. The gap between those who own assets and those who don't gets wider every year. When inflation runs hot, your savings lose value while you sleep. $1,000 today buys less next year and less the year after that. You didn't spend it, you didn't lose it, but it shrunk anyway. And when they raise rates to fix it, your mortgage payment jumps. Your business loan gets expensive, jobs get cut. You feel every move they make, but you never voted for them. You never chose them. Central banks are supposed to be independent, above politics, above pressure. But their leaders are appointed by governments. Their rules are written by politicians. Independent? Maybe on paper. In reality, the lines are blurry. So, Where does all of this go next? Meet the CBDC, central bank digital currency. Forget Bitcoin. This is the opposite. Digital money created and controlled directly by the government. No middleman, just you and the central bank. Sounds convenient, but think about what that really means. Right now, when you pay cash, nobody knows. It's private. With a CBDC, every purchase is visible, every transaction tracked. The government knows what you bought, when, and where. And it goes further. Imagine money that expires if you don't spend it in time, or money that can only be used for certain things. That's not science fiction. That's what CBDC make possible. China already has a digital yuan. Over 130 countries are exploring the same thing. The central bank started by controlling how much money exists. Now they want to control how it moves, where it goes, and when it disappears. So ask yourself, who really controls the money?